Well, hello, everybody. Welcome back to week 3 of our series, really looking into IULs. Not that we don't talk about any other products, but lately it's kind of been what Sean and I have wanted to help train those of you on. Before we get into the webinar, a couple housekeeping rules. First of all, Sean and I are here for you. So if you have questions, please ask them. If not, you might as well listen to this later when it's recorded on YouTube. Not to say don't listen live, but if you have a question, ask it. That's the best part about listening live. If you have questions, please put them in the question box. If it's relevant to what we think anybody or other people on the call might want to know, we will answer it live. If it's an individual situation, maybe you ask us a question about a case or something, don't worry, we'll still answer that. We'll either myself or somebody on our team here at Western Marketing will just get back with you after the webinar. My name is Jim Codney. I'm National Sales Director here at Western Marketing, and on a day-to-day basis, I manage our life and annuity team. I'm going to introduce my guest speaker, almost part of the team in it for sure now, even though he works for a different integrity partner. But Sean Ruggiero, good friend, good partner, great mentor. Welcome, Sean.
Hey, Jim, how you doing? Good to see you again. Thank you.
Good. Hey, Sean, before we get into today's topic, how to unlock sales opportunities using the confidential needs analysis, fact finder, whatever we want to call the thing where we're taking the information of the potential clients. Do you want to address something that came up after last week's presentation? Had a couple agents, 2 agents that really wanted clarification. I know we talked about similarities between IUL and whole life. And so if you don't mind, would you just clarify that for everybody? That way there's no confusion and we can make sure everybody's on the same playing field.
Absolutely. So first, I appreciate all questions and comments. I never view them as negative. I mean, if you said, I don't like your shirt or something like that, I still probably wouldn't be as negative. I would take that into consideration. And maybe if I got enough of those comments, Jim, I would change my shirt, right? But my point is that it's good to get feedback. And I know what do I preach, Jim? Confidence, right? Confidence. Not everybody who's watching this, in fact, very few are going to be securities licensed. They're not going to have experience managing people's money or entire portfolios. That being said, they're very capable and completely legally licensed to go out and sell annuities, to sell life insurance. So I'm trying to show them how those fit in. So we get these questions oftentimes because there's some, take this the right way, but some insecurity. Like my whole career was based off insecurity. And if something didn't make sense, or if I disagreed with something, please ask for clarification, because one of 2 things, Jim, I make mistakes sometimes, right? Like I played football for like, I don't know, 16 seasons or something, from middle school, high school through college, and 1 year after and I coach football. So I know what I'm talking about, but sometimes the wrong words come out of my mouth, right? And I always tell people, hey, listen to what I mean, not what I say. Funny, but there is some truth to it. The idea is this, I might have said something that is confusing, or there might be confusion in what I said. So I said it correctly, but there was confusion in what I said. Regardless, this is great because we had some agents that said, hey, and I'm paraphrasing a little bit, Jim, right? And if 2 people said it, that means that there's probably a dozen people that thought it. They said, wait a minute, Sean, you use whole life and IUL interchangeably, right? That's kind of paraphrasing, but you use it interchangeably. They're not the same thing. And if hopefully I said this the correct way, but if you watch the recording, or if I can clarify here, what I said or what I intended to say was this: IULs are a form of whole life. There are two basic categories. Like if we look back, depending if you believe in Darwinism or something else, no offense, I mean, whatever, things come from a lineage, right? Or look at the first cat ever, and then the lineage of those cats as they were bred and as they were changed and altered. Um, Whole life was first, and it's separate from term life. They're life insurance, but kind of like kingdoms, phylums, you can get on the species and genus and all that stuff. There's different variations, different branches of it. They're two separate types, term and whole life. Term you never own, but it has the cheapest price per $1,000 of death benefit. Whole life you own, and it can accumulate cash value. An IUL, and I believe I stated this, is a form of whole life. In the presentation, I talk about why you need whole life or IUL or whole life, and I interchange them. And what I tried to explain was this. If I did a poor job, I apologize. IULs are a form or a subset of whole life. They are permanent life insurance. They're designed to be permanent. Did you know you can actually buy IULs that have guarantees that they never lapse, that there's a guaranteed minimum death benefit, just like a whole life? I mean, we get into so many offshoots. I was trying to give you a general idea. And if you recall me saying this, if you believe that the market won't go down every month, every year for the rest of your life, I know it sounds extreme. I don't believe it. I don't think most people believe it. Then an IUL is arguably a more intelligent form of life insurance, because rather than just relying on a minimum general fund dividend for a traditional whole life or a level whole life, you will accumulate more cash that has been proven statistically over time by taking that dividend money and putting it into a call option. That's the DNA of a whole life policy and IUL are almost identical. You put that in a call option, the call option hits. When it hits, you can get up to 8%, up to 10%, up to 13% of that index, such as the S&P 500. And that statistically is proven, as long as the market does what it has done, doesn't have to go up every year, is statistically proven to outperform and accumulate more cash than a traditional level pay to 100 whole life. So Jim, when I use those interchangeably, I'm sure at some point I said something that was, forgive me, probably contradictory or a little confusing. I apologize if that happened, but hopefully what I just explained then and re-explained now makes sense. And when you submit, because one of the things I've taught is when you ask these golden questions, when you go through the value of life insurance, you don't need to tell them, here's the product, here's the company, here's the illustrations, because that's going to take you away from your core competency. Over time, you're going to learn them and you're going to understand what applies where and when do we do it, what scenarios does that apply. But you just submit it securely through the Ask a Specialist, and Jim and his team are going to find the best fit. And every once in a while, Jim, I was explaining this to you, sharing a little bit of personal information. I have a sizable IUL that's in a separate ILIT, irrevocable life insurance trust. And then I have another that is with Lafayette Life, and it's called a participating whole life. It's a dividend paying whole life because I have different needs for both of them. So that's what we want to approach. That's why I try to interchange it, because we don't know if it's going to be a whole life or an IUL. A lot of times for your average middle of the road client, it's going to be an IUL for the reasons that I stated. Hopefully that wasn't too long-winded, Jim, and hopefully that explained what I was trying to implicate when it comes to whole life and IULs.
Yeah, Sean, pardon me, I think it does. And, folks, look, if as you're learning or as you're growing confidence, feel free to differentiate, right? And say an IUL is a form of permanent life insurance. I think we can get into semantics about, which is which, whole life or permanent insurance. Either one's fine because they're very similar and they're both, it's all permanent insurance, IULs as well as whole life. So Sean, thank you very much for clearing that up. And let's go ahead and hit this week's topic.
Awesome. Yeah, and keep the questions coming. Good or bad, they're all good. I really do mean that. We're here to serve you and make sure you understand that you're competent. So this is a fairly quick presentation, but it's very powerful. Today, we're going to talk about unlocking sales opportunities using the confidential needs analysis. Now, I've told you this before. You might remember. Jim, I'm sure you remember. It is printed on the top of the form, whether you do it digitally or in paper, it's printed as confidential needs analysis because those words, when the client reads it upside down, are going to spark what they want to be thinking about. Confidential, right? Yes, we keep their information confidential. Needs and analysis. I am here to discover your needs through analysis. Now, I call it a financial inventory. Many people call it a fact finder. All of those are accurate. So I'm going to show you how to review that and how to take pieces of it, kind of like a choose your own adventure. Like you pick this, it's going to result in that. You pick that, it's going to result in this. I'm going to show you to put these combinations of data into sales opportunities, and then how to leverage the Ask a Specialist through the Western Marketing Life and Annuity Resource Center, and let Jim's team do the heavy lifting for you. Well, the heavy lifting is still making the sale, so let's not get that confused. But have them do the back end, the laborious task of putting this all together, and then you can go present the final result. So let's go ahead and go through that now. A little bit about myself, and I won't do this in great detail because most people have seen this before, but I'm a managing partner in Integrity Marketing Group, and I currently serve as the Chief Sales Officer for Brokers International, and still hold 4 or 5 designations and a securities license. An important notice: myself, Western Marketing, Integrity Marketing Group, and its affiliates do not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only and is not intended to provide, and should not be relied on for your clients, as tax, legal, or accounting advice. Everyone should consult their own tax, legal, and accounting advisors local to their state, local to their situation, and intimately involved with that client before engaging in any transaction. So here we are. Jim, this is the LARC, right? This is the Life and Annuity Resource Center, which they can access through the Western Marketing website. And when we focused on the Ask a Specialist, we focused on the annuity badge. What we want to focus on now is the financial inventory or confidential needs analysis. So you can see that's in the top right there. When we click on that, and one thing I want to advise everyone on is that this is a generic version. So Jim, I give this presentation because everyone can adjust a little bit. I know that you all have recently made updates to the confidential needs analysis that are going to be slightly different than what you see here. Please don't worry about that. You're going to understand the concept very, very well. And everyone, Jim's more involved, I think, than a lot of the agency out there, probably 96% of them. And so he has guided the Western Marketing CNA to be a little bit more specific and helpful for Western marketing agents. So let's go through each section here. In this first section, you can see it highlighted here. We're gathering all the base information that we would need to submit a life or an annuity scenario, right? So Jim, if we needed to get a quote, if we needed to get some illustrations, if we needed to run a scenario by the experts and see if it even makes sense, much less go out and present it, we would need their name, we'd need their age. Height and weight helps for what? For life insurance, okay? Annuities don't care what your height and weight is, but life insurance can. And we need to know the state. Annuities in particular, Jim, can be very restrictive in one state versus another. There's annuities that are not allowed in the state of Idaho that are allowed in the state of Texas, okay? Just giving that as an example. Here's another thing that we're going to extract. Are they married? Do they have the spouse? This is critical. Jim, we need to know if they're married. We need not only know if they're married, but what is the age of their spouse, okay? And we're going to get into health just a little bit later. But then also that last question there in the bottom right, do they have any children and what are their ages? And feel free to ask about grandchildren too. Very, very important we get a quick picture, and we do it in 12 data points right here. Very, very quickly, we gather all the generic information we would need to submit a life or annuity scenario to the Life and Annuity Resource Center, the LARC. Now let's go down. So then this one is geared towards Medicare sales, Jim. So the medical expenses and Medicare supplement or the are you enrolled in Part A or B comes before this because that's the primary. But then we need to move down to what we call extended care. Now here's something that I get questions on a lot. How do I bring this up? Now we've obviously talked about the golden question, Jim, how when we ask if someone is self-insured, it is a much easier question to ask and answer than if we ask them, do they have a 401k? How is it performing? And we're also not blurring the lines of needing a securities license. Well, the same thing here. We need to know some information, but on each of these next three sections, there might be a client who says, why do you need to know this information? It's a valid question. People are going to be defensive. People are sensitive these days to the information that you're gathering. I think that's fair. So what we need to understand and what they need to understand is, listen, Mr. and Mrs. Smith, I'm asking these questions for a couple different reasons. But the number one reason is I need to understand what you would be qualified for, period. And that's going to include an idea of what your assets are, your income, your health. All right. I have to have an idea of that. And then secondly, we need to have an idea of what you might already have that can not only assist in paying for your Medicare supplement plan, but what might supplement your Medicare supplement plan. Because retirement is one of the most confusing parts of our entire what's called financial life cycle. See, the accumulation part, Jim, is real easy. Now, I'm not saying, actually, it's simple. Might not be easy because you got to go get the job. You got to work hard. You got to do the 9 to 5. Put your head down. Notice the grindstone. Start putting money away. Heck, you know how much money we put away and we just never see in that 401k? It gets taken off right off the top. Hey, that's called paying yourself first. At the end of the day, your average American, that's what they do. That's how they save up money. They don't just wake up someday and say, oh, son of a gun, Jim, I got $260,000 in my checking account. Wonder what I'm going to do with it. No, it's long, sustained, dollar cost averaging, maybe some match into a defined contribution plan or a pension or whatever it might be. But we're putting that money away. Okay. So we need to know where these people, where they stand from a retirement standpoint. And we're going to start off with extended care for a very good reason. So Jim, if you notice the questions here, the very first one under extended care is, do you own a long-term care insurance plan? Now, if you do, tell us, what are the daily benefits, benefit period, elimination period, inflation protection? Is that included? What's your premium? Who's the company? But Jim, this is just short of what's called a rhetorical question. Because statistically, and we've reviewed this on the webinars, statistically, less than 5% of people 65 and older have long-term care insurance. But what percentage, do you all remember what percentage, according to longtermcare.gov, what percentage of those people 65 and older will need long-term care insurance? 70%. So it's an epidemic, and we know that. That's why I say it's also rhetorical, because most of the time, 95% of the time or more, when you ask this question, someone's going to say, and they might have some clarification questions around it. But if you say, no, do you have a long-term care insurance policy? They would definitely know. Sometimes they have a small one through work. Sometimes it's not portable. Yeah, you're going to have to weed through all that. But the broad answer is no. No, I do not. And so here's one thing that we had. Here's one thing where we do start to dig a little deeper. Jim, do you see at the bottom of this section, it says, most people have 4 concerns regarding long-term care. Remaining independent, having choices, protecting their assets, and being able to stay at home, right? I think that's part of remaining independent. What are your big concerns? Because this can help us when we look at putting together a plan. Now, never sell a Medicare supplement plan like it's going to take care of all these. In fact, Jim, you know better than me, but Medicare supplement plans, Med Advantage plans, they don't take care of every long-term care insurance need because they're not long-term care insurance. But let's get an idea. Do you see how I phrase that? Say, hey, I just need to get an idea because I need to, when I'm shopping around, I want to see not only the price and budget, but I want to see what are best options there to fully protect you. Because, hey, in retirement, we're going to get our retirement income. Maybe we're cashing out a 401k. Maybe we're getting a pension. Maybe we're getting Social Security, or hopefully we get Social Security. But what we're certainly not doing is going back and creating more human capital. We're not going to go get we're not going to go become a surgeon when we hit 68. I mean, could someone do it? Sure, absolutely. But why? And realistically, no, you're not going to do it. So that's why we need to know this. That's why I want to prepare the best plan for you. I need the holistic view. So Jim, you'll see that I'm constantly trying to give the agents and the people listening here an idea of how we are asking permission and why we're asking permission for these. And here's the reality. These questions all fall in line. They don't really know the difference. You're going to throw people off if you start asking about their 401k. If you start asking about stock picks and things like that, that throws them off. But asking about extended care, long-term care, insurance doesn't throw people off. Now, let's go down to the third section. Well, fourth section, I guess. Not count if you count the general information. This is the money question. This is the money section. I say that more as a figurative term, right? We're not trying to get money from people. We're trying to service them. And as a result, we get paid to take care of our families. But this is where we have the question about insurance and then the golden question. So we have to ask this. Now, Jim, again, what would be my Trojan horse? How am I bringing this up to a client to where they're comfortable? I would say something like this. Hey, Mr. and Mrs. Smith, I'm going to ask you about life insurance now. And the reason why is because there are certain forms of life insurance, especially some of the newer ones, that have benefits, things called living benefits or certain riders on them that can help offset some of these costs or some of these gaps, right? So let me ask you about this. I mean, Jim, doesn't that make perfect sense? Someone would be totally comfortable asking that. You're just in a rhythm. You're
Yep.
asking, you're helping them out, and you're doing it with a servant's heart because that's not made up. You're actually doing that. So Jim, Mr. and Mrs. Smith, whoever I'm speaking with, I'm going to ask you, do you own any personal life insurance? Now, notice I asked personal life insurance, and I will exclude business-owned life insurance right there. I'll say, I'm not talking about, insurance you own through your company. It's oftentimes pays too little. It's usually a term policy that's going to expire even if you're able to keep it. And the vast majority of times now that you're retiring, it's not portable. So I'm talking about something you own, something that's going to be there when you actually need it. Do you own any life insurance? Yes or no? Now, what type of coverage is it? Or how much coverage is it? $100,000, $1 million, $25,000? And what type of life insurance is it? Is it term or whole life? Right. And again, if it's an IUL, if it's a participating whole life, it's a dividend whole life, if it's a GUL, if it's a VUL, those are all forms of whole life insurance. Hopefully I made myself clear. So you can check whole and you can put everything else under the agent comments. If it's term, increasing term, decreasing term, if it has paid up additions, just check, is it term or whole life? And then you can put in the agent comments what it is. And then what's the monthly premium? Okay. Following that, we have the golden question. Mr. and Mrs. Smith, do you have anything that acts like life insurance? A 401k, an IRA, a Roth, maybe a large CD or an annuity, something that's going to go probate free over to your beneficiaries when you die. Meaning, are you self-insured? We've reviewed that golden question ad nauseum, right, Jim? And I mean that like in a positive way. So check which one it is and put the amount there. And if you have questions, please ask Jim, ask myself. We'll help clarify that for you. All right. But this question unlocks what assets are available to better protect and prepare them for retirement. Now that brings us to the last section here, retirement income. Hey, Jim, I'm going to ask you some questions about your retirement income for you and your spouse. The reason I do this is we got to know what you qualify for, and we got to know what you can afford. Okay, and they have very, very specific, rules on who can purchase what. And I'm kind of making that up. Like I don't want to lie. I'm not saying that way. I'm saying you all know that world better. But there is qualifications. There might be a certain income limit that you don't qualify for one, or you might need a certain amount of money to afford the premium. Wouldn't that make sense? If you're in a deficit every month, do you think you can go out and comfortably afford a $200 Medicare supplement plan? I don't think so. So in whatever words you choose, explain why. I always give what I call that Trojan horse, that reason I can enter in. Explain why you're asking these questions. All right. Health questions. I want to ask, and health questions are up there in the earlier section. Very important because we need that for life insurance. We need that to understand mortality and get a general idea of, is this person healthy and going to live a long time, or is this person not healthy and maybe going to live a shorter life? But these preemptive, these preamble questions allow them to be comfortable and they give you permission to proceed. That's really what you're doing. So, hey, I want to make sure I ask you these questions because it wouldn't make any sense for me to present a product to you that you wouldn't qualify for. Would you agree? Okay, I need to ask these questions because it wouldn't make any sense for me to present a product for you that is unaffordable. Would you agree? See, I always ask permission. And by doing that, they're nodding their head, they're in control, and you can proceed. And I don't think any of these things present a brick wall. In fact, all of them are going to be favorable to the client because they feel for the first time in many years, someone is actually paying attention to them. So see how we broke this down? Mr. Smith, Mrs. Smith, can you please give me an idea of what your income is? So for you and your spouse, that's how we put it. We keep it very general. If there's no spouse, you exclude that part. And we say, all right, how about employment income? Are you still working at all? How about you? How much per month? How about your spouse? How much per month? Put it right there. Social Security, how much are you bringing in? Mr. Smith, you're bringing in 2,000. Mrs. Smith, you're bringing in 600. Great. Pensions, right? Yes, no. Maybe Mr. Smith has a $250 a month pension. See that transfers with the question mark? Jim, that is asking if the pension transfers to the spouse when they die. Does that make sense? Because some of them will, some of them will transfer half, 50%. Put that in the agent notes. And then we do keep this question in there. I think this is important. Mr. and Mrs. Smith, who do you consult when making financial decisions? You know, if you're doing a really good job, they're going to say something like, you're the man now, you're the gal now, right? You're the one we consult. In my experience, when I asked that question, they weren't really sure. Isn't that kind of sad? Here's someone who spent 40 years of their life sweating blood and tears to get this $400,000 retirement. But then that money's really not quite enough for them to get weekly or monthly calls or get invited to play golf with their financial advisor. I'm not putting financial advisors down. I am one, right? It's a different business model. So when I ask that, it's a very powerful question because one, we want to know. If they say, oh, it's Steve, he works with Raymond James and blah, 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 right? Okay. We better start thinking about how we're going to present this to Steve, right? As well as to the clients. But if they say what I encourage most of the time, I don't know. We spoke to a guy or we spoke to a gal and, honey, can you find that file? They have no idea, Jim, because they flew under the radar. They have $180,000 of investable assets. Jim, you had a securities license. That's not a very attractive client because when they have $180,000, does that mean that they have far less questions than someone who has $18 million? No, in fact, they might have more questions. Yet you're getting paid 1% or less on that. So have fun with that. You're going to answer a bunch of questions, be legally responsible for everything, and you make $1,400 a year, right? So we want to ask that question. Who do you consult with when making financial decisions? And then finally, do you see the agent notes? Jim, this is very important. Fill that up as much as possible. There's a digital version you can print it out and write it in. Talk about the pension that might lapse. Talk about the fact that the spouse had sold a company and is going to get a certain amount of money or a dividend for the next however many years. Talk about anything they mentioned about the life insurance policy they did have or didn't have when it was taken out. Add some color and some flavor to that. But this is a powerful section. And as you can see, and as I'm sure you would agree, Jim, each section falls in line with why we are there. It falls in line with the license that we carry. We're not going outside the lines. But most importantly, it allows us to go through and submit something to the Ask a Specialist and have all the information that they need. So we're going to wrap this up here shortly. Like I said, this isn't a very long presentation. We're going to open up for some questions. But you just created numerous sales opportunities. Let me go through just some of them. And then, Jim, I'd love it. If anyone else is thinking of one, put it in the comments. Jim, if you think of one, mention it to me. This is how abundant this exercise can be. But Jim, the first one I'm going to go over is this. What if they answered no to the long-term care question? Do you have any long-term care insurance? And that's almost that rhetorical question. What if they answered no like we expected? And what if they answered no to the golden question? No, I don't have anything that makes me self-insured. I don't have a 401k, an IRA, an annuity. I don't have anything that's going to transfer over any sizable amount. Well, you know what? You just unlocked the opportunity for an IUL with living benefits or a dividend paying whole life or some form of whole life. Why whole life? Because you need the living benefits, and there are some term policies that have living benefits. You need the cash value, right? And most people are 65 will only qualify for a 10-year term policy, which they're probably not going to die in that amount of time, which is why they're eligible for it. And it's going to be very expensive and it's going to build no cash value. Okay. So am I making sense why I stated IUL? and or whole life policy. Not interchange them as the same thing, saying they both can have living benefits. And they're both going to be the proper insurance that we write for someone who is 65 and older. Perfect. Okay. Number two, what if they answered no to the long-term care question, but yes to the being self-insured? Yes, I do. I have a $200,000 IRA. Perfect. Did you know, Jim, there's 3 companies out there that do it. My favorite is Global. And then we have one that can handle qualified money. They do it as kind of through a conversion. But did you know there's actually companies out there that write annuities like the Global Forterre, and that might be one that we set up a webinar with, Jim, because it's a great product, that truly is a long-term care policy. It pays out and is registered and tracks with the tax benefits as being a long-term care coverage policy. Jim, I sold a plethora, I'm from Seattle. I still have a place, well, it doesn't matter where I live in North Idaho and Panhandle. I'm still close to Seattle, well tied into Seattle. When Seattle, and apparently there's 4 or 5 more states that this is going through legislation. When Seattle passed a mandate that you have to have long-term care or you're going to get a tax taken out of your pay, you know how many people jumped on that? In fact, the long-term care companies started to stop doing business out there. It was too much with unknown risk on the insurance there. Global kept writing them. It was awesome because we could take $30,000, I think that was the minimum, $50,000, and now they have a long-term care policy. So if you answered no to this and yes to that, right? No to long-term care, but yes to being self-insured, boom, long-term care annuity opportunity. What if you answered yes to life insurance, Jim? Remember that question? We asked it right before the golden question. Do you have any life insurance currently? Personal life insurance that you own, not commercial insurance, right? I'm repeating myself intentionally. I'm gratuitous. I try to repeat it over and over again so we set it to our mind. Something that's going to be there when you need it, right? Do you have any of that life insurance? What if they say yes? Oh man, Jim, they already have life insurance, right? I lost my opportunity. No, that's a great answer because that now opens up the idea that you can perform a life insurance review and a potential 1035 exchange. That's under the IRC. Okay, the 1035 exchange, similar to a 1031 exchange for real estate. A 1035 exchange, you notice I did it blue and purple. You can take a life insurance policy and transfer it to another life insurance policy. Now, term won't qualify because it doesn't have cash value. But you can do a 1035 on a life insurance policy and you can fund an annuity. What you can't do is take an annuity and 1035 exchange it into a life insurance policy. You can 1035 exchange an annuity to another annuity. The owner, the beneficiaries all have to stay same, and you can't decrease the face value. Makes sense? Okay, great. Point being, they might have a life insurance policy, but it might not be adequate. It might not have living benefits. Jim, you've been around for a while, okay? You and I are both kind of old, right? We love it. We embrace it. But
yep.
They didn't have all of that. Living benefits is a relatively new phenomenon. Wouldn't you agree? Like a lot of the older policies didn't make sense. Can you still hear me?
I can now. Yep.
Okay. It's asked me to use new hardware for my microphone. It just popped up randomly of all the times, but I said
we're good.
No.
We're good.
Okay.
We can hear you.
Okay, great. Perfect. Number 4. What if they answered no to life insurance, which a lot of them are, and no to being self-insured? Well, this is the golden question 101. This is what we taught in our first webinar. Yeah, you know what? Have you ever considered an IUL to supplement your retirement? Boom. There we go. With that 101, right? What if they answered no to life insurance and yes to being self-insured? Yes, I have an IRA with $225,000. Remember our scenarios? Great. Jim, is that money protected? Mr. and Mrs. Smith, is that money protected? Well, I don't know. What do you mean? Well, we're one of the nation's leading providers of retirement protection plans. We use something called an FIA, or fixed index annuity. The fixed index annuity is arguably the best financial product when it comes to these 3 things. Protecting the principal. You will not lose money with market downturns, which would be very valuable right now as the market has been taking. Number 2, it has higher earning potential, right? It doesn't beat the market, it doesn't even get all the market gains, but because it participates in the market, there are years where if the market goes up 22% and hypothetically you got 11%, when's the last time you had 11% in a CD or a money market account or a treasury bond, right? So it has higher earning potential than other risk-free or low-risk investments. And then third and finally, an FIA is an annuity, even though it's not your granddad's annuity. It's a much more smartly built contemporary annuity with great benefits for you and smartly constructed. It's still an annuity. And only annuities have mortality credits. So only annuities can guarantee you a paycheck for life. Remember that teaching? Remember that we learned that? That's when you would apply it. Boom. So 4 and 5 are just based on the golden question. Number 6, just a random one. They're married. How easy is that? In the very first section, I asked them, what's your spouse's age? How long have you been married? What's your anniversary, right? Right there, when you combine it with the last section where we got retirement income, Jim, and you combine that with some of our teachings, income replacement. How many people here are the exact same age, exact same health, and they can hear, meaning how many clients have you run into? I'm 65, she's 65, we're both healthy, and we're going to die at the same time at 89 and a half years old. Oh, great. It doesn't happen. That's a dream, right? So what we need to look at is how do we offset the income that is lost when the first spouse dies? We can do it with one of two ways. We can do it with an IUL, death benefit, pays out tax-free, boom. Or we can do it with an FIA, accumulates. Then once they die, you activate the lifetime payments. Wow, incredible, right? How about kids? Remember that first section, that simple question of kids? I'll tell you what, you want to sell me something? Talk about my kids. Talk about my eventual grandkids. Oh, you got me, Jim, right? I am a lay down when it comes to that. So they have kids. Do you have any desire to pass on something like a tax-free gift to the kids, maybe to help offset burial costs, or maybe you got a pretty good net worth, Mr. and Mrs. Smith, maybe to help offset federal income taxes that could be there down the pipe because we don't want to have to start selling off pieces of the estate. Or maybe you just want to give them some money to further life or pay for college for the grandkids or whatever it might be, right? So right there in that first section, if they have kids, there's an opportunity to pass something on tax-free in the form of an insurance policy, specifically an IUL. Well, what if they have kids and they want to pass on lifetime income? Tom Hegnan talks about this, Jim. I know you've heard him speak, and he'll be in Dallas when we're there. But Tom talks about paying people from the grave. Wouldn't it be cool to set up a gift lifetime annuity where after grandpa dies, you're still getting $250 every birthday, and that was your granddad? Like that's cool stuff. And Jim, I didn't even go into all of the scenarios. So what do you need to do? Is this seem confusing? It shouldn't. I'm just trying to spark the idea, the combinations that come up once you use this financial inventory, once you use this confidential needs analysis. All you have to do is this. Remember I said take copious notes? Remember I told you what to fill out? Click on the Ask a Specialist. Now you have all the information that you need to put here. And where it says additional comments, fill out as much of that as you can. That's the golden ticket, because we have to go out there and we have to help them. With a servant's heart, we want to go help them. We want to do what's best for them, and we want to improve their situation. I'm telling you, there is something that happens as we get into retirement, as we look at our mortality. When we die, it's not about how many zeros we had in our bank account. It's not about what private jet we flew around. That's all about you. And there's nothing wrong with living your life for you, okay, to a certain extent. But I think what people know, and people find, most people, is that the true love and gratification comes from what we can do for others and how we can pass on that living legacy. I'm not trying to be too dramatic with it. I'm just saying there's some motivation there. It's your job to ask the questions and then bring it up. Because if you ask every question, I don't care if this is during annual enrollment and you're feeling like you're locked up. Jim, wouldn't it be valuable if they just kept every single one of these? Or at night, they submitted these scenarios, or in the morning with an espresso, they said, okay, I'm going to submit my 6 scenarios or my 2 scenarios, whatever it is. Now you have a hit list. Use it the proper way. You can start calling these people back in January and February and saying, hey, Mr. and Mrs. Smith, it's me, Sean. I helped you with your Medicare policy. Hey, listen, beginning of the year, when we talked, you said you had 6 kids, but you had nothing to pass on to them. And I know that was pretty important. We have a new company, or a product from a company, Mutual of Omaha. Have you ever heard of them? Yeah, okay, great. A+ rated. So they have a new product that might be just perfect. So it can help you pass on money to your loved ones, to your kids, to the grandkids, help pay for college, whatever it might be. I'm just giving you one example. One example. There's so many. Put the information in, comment about what you feel might be the best combination, or you're open to what it is, And the Ask a Specialist team will come back and say, hey, here's a couple things you could do. You could take their current IRA and you could put it into a guaranteed income FIA that when the husband dies, the wife turns on the income and now she's paid for life. Or you could purchase an IUL that when he dies or when she dies, it passes on to the kids. It pays for college, or it gives her a tax-free gift so she can supplement the next 10 years of her life without taking a hit for income. In fact, it might even give her a little raise, offset inflation and whatever those costs may be, or God forbid, she gets to go on a vacation once more before she dies. Stuff like that. I know it sounds like I'm trying to hit heartstrings, but if you don't approach this from a personal level, then you shouldn't be doing the business, right? People want you to connect and listen to them, ask these questions, and you'll be able to piece together exactly what you need to submit to the Ask a Specialist. And then they're going to come back to you and say, hey, here's a couple things that you can do. Here's what we could offer. So here are the steps. If you want to double your income, if you want to take advantage of this, first, download the confidential needs analysis. Jim's got a great one. Jim, that should probably be ready by the end of the week, just FYI, the one that you customize. Ask those questions and the golden question every single time. Get very comfortable with it. Do not let anyone intimidate you. Put them first. Your intimidation should be tertiary at highest. Put them first. Put your family first, right? Put your desire to just be better and delve into the uncomfortable and conquer a daily task. Sometimes that doesn't have to be climbing Mount, Bora or Mount Rainier. Sometimes it can be just getting enough gumption up to ask questions to someone who doesn't want to have questions asked. You're going to learn a lot about yourself, and you're going to find that you could piss someone off. So be it. That's on them. It's never personal. Or you could find that you just touch someone, help someone because they are so defensive. They're so protective because they've been burned. And if you approach this with a servant's heart, that's not going to happen. And they're going to be loyal to almost to a fault to the end of their life. And that's what we're looking at. That's what feels good. We all know it. Everyone on this call, if you've done this for any amount of time, you know that's the best feeling in the world, right? Number 3, submit all your scenarios to the LARC team. Let Jim and his legion of help. And I said legion because Jim's got a crew there, and then he's backed up by people like me and all the sales support at Brokers International. We've got a wealth of information. We will find out what the best product is for them and how to solve some of their scenarios. And we'll even be able to help you point out some scenarios that you can solve that they might not have realized existed. Not like we're fabricating them, right? My least favorite saying, Jim, is I can sell ice to Eskimos. Well, then go to hell, man, because Eskimos don't need ice. We sell stuff that people need. And you're going to be able to not only find that they didn't know that need existed, but maybe they knew it existed. They had no idea that they could resolve it. Boom. You're the hero, right? And your goal, as always, is to write one annuity per quarter and one IUL per month. And you saw how that adds up. That's $20,000, $30,000, $50,000 of extra income, and you're helping people out. Jim, hopefully that didn't take too long. We're done here at 11:43. And that also included a little bit of a preamble and clarifying some things. But let's open it up for questions, Jim. And I'm going to stop sharing my screen also.
Yeah, Sean, first of all, thank you very much. Folks, if you have questions, I'm having trouble with the question box, so please just type it in the chat box, and I'll get to that. I want to talk about a few things while I give you a couple minutes to add stuff in the question box. First of all, Sean brought up the way the market has been the last few days, 3 or 4 days. It's been, some have been calling it a bloodbath. I don't know what it ended yesterday, but I know at one point I think it was down 2,000 points. I want to talk really straightforward. In our industry, with what we're able to do, especially with fixed indexed annuities, it's a great time for us. And I'm not talking about taking advantage of people. However, a lot of times historically, when people go through times like we're going through right now with the market, or 2008 when the market went down, they start really focusing on safe places to put their money. So for those of you who have been looking for a time to get in the fixed annuity space and add that to your portfolio, now's the time, folks. I really believe that, because I have in the last 2 days had many calls and illustration requests from the Ask a Specialist team, or just individual calls and emails specifically because agents have clients who want to diversify. Now, not everybody wants to take every penny out of the market, but they want to diversify so that not all their assets are at risk when something like this happens. Second of all, um, long-term care has been brought up multiple times in this conversation, not just today, not just last week. I believe it's an epidemic in our society, in our country, so bad so that we used to have a plethora of long-term care, traditional long-term care insurers. We don't have that anymore. And the
Mhm.
stats I'm hearing are the couple we do have still reject, and I'm just ballparking roughly half of the underwritten apps that they get. So if that's what's happening, the good news for you and your clients is we have other alternatives. We have products with living benefits. We actually have products both on the life and annuity side that have long-term care. Uh, Sean brought up one he loves. We do a lot of business with an annuity through Equitrust called the Bridge. And the
Yep,
reason
good one.
we like that product is it's not only is it a really strong product, but they actually have what they call secure. For the rest of us, it's a guarantee issue option. So your client can leverage their money and still get more than what they put in leverage if they ever do need a long-term care. What I like about the life product and the annuity product is unlike traditional long-term care, if your client is one of the lucky 30% that doesn't need long-term care in their life, they haven't just burned those premiums, right? Because they're either having a death benefit or accumulating funds in an annuity for their lives, for their loved ones, for their spouse, for the kids, for their retirement, for whatever scenario is important to them. So we can help you with all that. We are updating, as Sean said, the fact finder, the confidential needs analysis, whatever we want to call it. We're going to hopefully integrate some of those additions into the Ask a Specialist, because the more information you give us when you submit that, the more likely we are to give you a scenario or a product option that will fit your client's needs as good as possible. So, and that's our goal. As Sean said multiple times, we work with a servant's heart. We take care of our customers. Everything else handles itself. The income, the recognition, all that. I promise you, if you just work hard and you keep at it and take care of your customers, you're going to do okay. But you've got to get there, right? And sometimes the first 10 steps are harder than the second 10 miles, right?
Yeah.
And it's getting off the couch and doing it. So, Sean, I don't see any questions, but I want to, before I thank everybody, I want to tell you next week, I'm really excited for next week. We are actually going to have Mutual of Omaha on, and we're going to talk about their IUL Express product.
Yeah.
And it is, it's one of our favorites. I think it's one of the best IUL products for a few different reasons in the market, which I don't want to give away the whole webinar because I want you to attend, and we'll have a good friend, Kurt Williamson from Mutual of Omaha on with that presentation as well. But folks, we're really, again, as I'm asking you to lead with the servant's heart, that's what we're trying to do as well. We're just trying to help. So if you have questions, you have needs, please reach out to us. Our number at the office is 800-852-7152. Again, 800-852-7152. My name is Jim Codney. I'm our national sales director, but I have two amazing marketers that work on our life and annuity team, Amanda and Tyler Marr. You are welcome to work with them or anybody at Western Marketing that you'd like. Again, our goal is to help you, because when we help you, we help your clients, which helps everybody in this conversation. So, to all of you who've spent now about almost 50 minutes, Sean and I really appreciate your time, your dedication to not only helping your careers, but serving your clients. That's not lost on us. If you need more information on anything, if you want future topics covered, let us know. Again, we're here for you. Thank you again for joining us, Sean. As always, my friend, thank you very much for your guidance, your mentorship, your wealth of information. These things take a small village to put on, and we really appreciate your help with this. So with that, everybody, thank you so much. Make it a great day. We will send this out. We've recorded this, so if your question was going to be, is this recorded? Can you send it to me? You'll get it in your email before the end of the week, usually in the next day or so, in an email. So have a great day, everybody. Thank you very much, and take care. Bye-bye.
Thanks, Jim. Thanks, everyone. Take care.